Good day and welcome to Global Derivatives TV. We're here at the 19th Annual Conference in Barcelona, Spain, and I have Dr. Robert Almgren here with me. Thank you for being here.
Thank you.
And he is a co-founder of Quantitative Brokers. And first of all, just to start, can you tell us what Quant Brokers is and what you do?
Sure. Quantitative Brokers, we do agency algorithmic execution in interest rate products. We don't do any prop trading, we don't do any market making, we're not a clearing firm. All we do is help institutional clients reduce their slippage.
Okay, then can you tell me a little bit about your background and how you came to start Quant Brokers?
Sure. I was a math professor most of my career. I was working on fluid mechanics and solidification problems, free boundary problems, and I discovered that there were a lot of interesting math problems in optimal execution in financial markets. I did a consulting project with Citigroup on equity transaction cost analysis, got to like that, eventually left the University of Toronto and joined Bank of America, where I was doing agency algorithmic execution for equities. Then a couple of years ago, my partner Christian and I realized that equities were pretty well under control. We had a lot of clients telling us that in the fixed income space, they had no idea how to execute or how to measure their costs. And we realized there was a huge opportunity there, so we started Quantitative Brokers.
Okay, and then what other products do you trade? You said fixed income. What other markets?
So interest rates are our mission. So that means at the moment interest rate futures. We've been live on CME, Eurodollar, and Treasury products for about a year and a half. This week we're launching on Eurex, Bund, Babel, and Schatz, and following with Life in about a month. That would be the Euribor and short sterling. And then down the road, our mission is to do the cash Treasury products that trade on eSpeed and BrokerTec in the US, maybe eventually European cash Treasury products. We'll never do anything else other than interest rates, no other futures.
Okay. And then what kind of execution strategies do you offer to your clients?
So we have the standard suite of execution algorithms, which are distinguished by the benchmark. So the most common, the most popular, the most sort of solid technologically is the arrival price, where you try to get the trade done as close as possible to the price that was in the market at the time the broker received the order. We also have a couple algorithms that try to get average price, either time-weighted average price or volume-weighted average price. And we have a special algorithm called the roll for trading the Treasury calendar roll.
Okay, and what kind of technology is necessary to do this sort of trading?
So our technology is pretty much the same technology that the big banks use. One of the reasons for having a small company these days is that you can go out and buy the same kind of servers. We're co-located or proximity hosted at the exchanges that we trade. I would say we haven't made huge investments in exotic technology like GPUs and FPGAs and so on and so forth. We have about as good as you can get with sort of off-the-shelf hardware. And we think it's important to do smart trading. We're not trying to be the best with nanosecond latency.
Okay, and then who would be your main competitors in this space?
The main competitors that we hear about would be the internal desks at the buy-side firms. So most big buy-side firms have their own desks that effectively play the role of brokers. We haven't yet seen too much competition coming from the big banks for a number of reasons. It's difficult for them to get into the space. The expertise and the knowledge of how to do agency algorithmic execution is mostly in equities. And they've been expanding to equity-related products, equity futures, equity options, international equities, foreign exchange, and the concept of execution, pure agency execution in rates products is a little bit foreign to them.
Okay, yeah, I mean, you still see a lot of them maybe going down to the trading floor.
Well, you were on the trading floor,
right,
so you know about it. In fact, yeah, so people like you used to be, a floor broker in Eurodollars, those people really aren't there anymore. The position traders moved to become high-frequency prop traders and market makers, and the floor brokers who would take orders from outside clients and get them done in the pit, they really sort of vanished. So we're trying to fill that niche.
Well, back in Chicago, like we discussed earlier, you walk around the CME trading floor and there's not a whole lot of bodies there anymore, especially in futures and options. It's a different story, but it's definitely
the options are still floor traded. It doesn't mean there's not a lot of activity in the market. It's just not happening with people on the floor. It's happening in the computers, which is where we are.
And then in terms of regulation, where's your niche there, and are current regulatory changes affecting your business?
Yes, so regulatorily we're registered as an independent introducing broker. although we don't really act as an introducing broker, we act as a floor broker. We're not an FCM. We work closely with the FCMs. That said, we are regulated by the NFA. All of our customer-facing people have Series 3 registration. We have to keep all the trade records for 5 years. We're regularly audited. We have risk controls that are imposed. They're imposed by the clearing firm into our system to impose the limits on their clients. There are also risk controls that the exchange makes available to the FCM. And then in terms of regulation, things like Dodd-Frank don't really affect us too much because we're not a bank and we're not a prop trading firm. We're in favor of markets being open and liquid, so we wouldn't support a transaction tax. But that said, if there were, it wouldn't have a huge effect on us because we're not going back and forth. We're acting on behalf of large institutional clients doing directional trades, and they're going to trade the same amount regardless if there's a tax or not. The other thing that we're watching is whether some of the current OTC products move to exchange traded, things like credit default swaps, interest rate swaps. We hear a lot about that from our clients, and if and when they move to central clearing and exchange traded, we'll be all over that.
Well, it's great to hear. Well, we've definitely covered a lot here this afternoon. Is there anything that I haven't asked that you think I should, or anything you want to add before we close it up?
No, just I think it's an exciting area. As I said, I've always been, myself, I'm a scientist. My background is science, and I'm looking for quant problems, and I think there's really a ton of interesting stuff to do in this area, both on the research level and on the business area, and it's really wonderful to be in a space where it feels like we're out in front and we're offering something to the clients that they really need and are not getting anywhere else, and it's interesting to do.
All right, well, thank you very much, Dr. Almgren. Great to meet
you.
And stay tuned for more interviews here at Global Derivatives TV.